Hey guys, hope you are all having a great day. Today we had a lot of really cool stuff happen. Adam Aron tweeted some bullish news for AMC and Ryan Cohen posted some cryptic tweets that had everyone excited and hyped up. We received the Federal Reserve minutes from its last January meeting, and we also got some news that Melvin is not doing so well financially. All in all, the news that came out today were all bullish, which is great to see, but I must forewarn to try to remain completely zen in the process. I published a morning video talking about the housing market, so go watch it in case you missed it. The link will be provided in a pinned comment down below. Before we start, let me quickly state that I am not a financial advisor, and that all content discussed in this channel is simply information gathered that I deem important for people to know, so that they can make informed decisions. All efforts are aimed to better understand the nature of the current market in anticipation of the greatest squeeze in financial history. Let's dive right in. Beginning with the easiest of news, the Fed released the minutes of their last policy meeting, shedding some light on the U.S. central bank's plans to trim its massive balance sheet and hike interest rates in 2022. We also got a glimpse at their shifting view on inflation. The minutes highlighted the determination of the bank to combat inflation. The minutes noted that they would not raise interest rates yet, but strongly indicated a hike on the way as soon as March. In addition, we now know that the Federal Open Market Committee set out procedures for how it will start unwinding its near $9 trillion balance sheet, which mostly consists of bonds it has purchased in an effort to drive down rates and simultaneously stimulate growth. Officials at the meeting expressed serious concern over financial stability, saying loose monetary policy could be posing a serious risk. Participants observed a significant reduction in the size of the balance sheet would be appropriate moving forward. The committee decided after the two-day session that it would not raise interest rates yet, but strongly indicated they will do so next month. Markets have seen a lot of volatility lately, with investors on edge as soaring inflation and hawkish talk from the Fed has made them uncertain about investments. In addition to the rate talks, the committee set forth a path in which the Fed will buy $20 billion in treasuries over the next month and nearly $30 billion in mortgage-backed securities. Some officials said it may be necessary to sell mortgages outright in an effort to make the balance sheets only be made up of treasuries, but the most likely path is that they will allow proceeds from maturing bonds to roll off each month. It's good to have actual data on what happened during that committee, and though not all the answers that we need were laid clear, we at minimum know how the Fed is looking at the situation. After the Fed released the minutes, U.S. stocks rebounded into positive territory as traders began to dismiss the prospect of a supersized interest rate rise in the months ahead. The S&P 500 index closed 0.1% higher after falling 0.7% earlier in the day. Nasdaq Composite ended losing only 0.1% after having fallen 1.2%. However, there has been some pessimism in Ukraine, with NATO Secretary General warning that Russian troop numbers near the border continue to rise, saying they have not seen any de-escalation. Joe Biden did say there is a lot of room for diplomacy to resolve the ongoing crisis, but noted that Russia is amassing a very threatening position. As such, Europe's Stoxx 600 index closed broadly flat. Wall Street and European equities rallied in the previous session as oil prices fell. The next meeting for the U.S. Central Bank is scheduled for mid-March, with economists expecting interest rate increases to tackle inflation. Investors are going to need to adjust for what is coming in the next couple of weeks. Moving on and away from inflation, Melvin Capital announced that they had sold their entire position in MasterCard during the fourth quarter, a stake they held for more than 5 years. They also liquidated their shares of Alphabet as the firm is seeking to rebound from last year's losses, which have been further compounded by the massive stock sell-off we have experienced this year. Melvin had big hopes for their new positions in Marvell Technology and Uber, but they have both stumbled 23% and 18% respectively so far this year, adding to their already vast losses. The hedge fund lost an additional 15% in the month of January. Melvin is just a walking disaster, stumbling around between stocks trying to find something that will at minimum hold them steady, but it seems they have bad karma, because wherever they invest, the asset's price value falls soon after. I take great pleasure watching this terrible and out-of-touch hedge fund scramble and tumble, and it will be interesting to see how they now plan to make a comeback. I would tell them to buy GameStop, but that would be like pouring alcohol on a very fresh wound. And now to the most important segment of the day. Yesterday, an article came out from Bloomberg which illustrated that liquidity is eroding in the U.S. Treasury market once again. This week's controversy about how much and how quickly the Fed will raise interest rates unleashed a bout of volatility. The Bloomberg U.S. Government Securities Liquidity Index is approaching last year's highs. This latest iteration might consider a half-point rate increase in March. As volatility has picked up, market depth has fallen. The Treasury market liquidity acted as an accelerant in the latest moves. All of this is very indicative that we could see a serious market crash looming ahead in the future this year. Right now, the sole and only reason stocks aren't tanking is because everyone has high hopes on the Fed's ability to calm inflation down. If the rate hikes in March don't do that, say hello to the moon and goodbye to the economy as you know it, because we are going into a full recession. The alarms are all ringing loud, and the market is pretending and acting hard to ignore them because everyone and their grandma knows that all this charade ends in the same place. This report was incredibly hard to see and watch, and shows we are set to drop hard if things don't magically turn around at some point before summer. Buy and hold people. And lastly, Adam Aron woke everyone up at 1 a.m. to announce that AMC picked up their 7th high-traffic movie theater on attractive leasing terms since this past summer. Adam Aron is the type of guy that makes me feel lazy. He's literally on the grind 24/7. That man does not rest, does not sleep, and does not stop delivering. I don't care if you think AMC is a deadbeat stock or wannabe GameStop. What you cannot deny is that Adam Aron is super proactive and very community engaged. To say that this man has set a new golden standard of how I expect future CEOs to form relations with investors is an understatement. But I guess Adam Aron wanted more than to tweet good news, he wanted blood, because on his next tweet, he chose pure violence. Citing a recent report by the Wall Street Journal, Adam Aron quoted the segment that read the Justice Department is pursuing wide-ranging investigation of short sellers with federal prosecutors investigating whether short sellers conspired to drive down stock prices. Not a single minute passed when Ryan Cohen tweeted "God bless America" with a pirate flag emoji. Guys, either this is the biggest coincidence of the year, or something is happening in the backstage that we don't know about and these two figureheads are teasing changes are coming. I am no longer jacked, I have turned full-blown Pamela Anderson today. I am zen, because no emotion will disrupt my sigma-neutral mindset, but all things that are happening are very bullish. I will be buying more and more of the stock in the days to come, for I only see green tendies ahead. Now, let's talk about performance. The Fed submitted over $1.644 trillion in reverse repo operations today. Dark pool trades for AMC accounted for 59% of the total volume today, while dark pool trades for GameStop accounted for 54% of the total volume today. AMC had a larger amount of buy orders than sell orders, with GameStop also having a larger amount of buy orders than sell orders. Now, let's talk about performance. AMC traded bullishly, gaining under 1% for the day. AMC traded bearishly during the pre-market, falling well beneath the VWAP and testing support at 19.25 at one point. Upon market opening, AMC starting to aggressively move up, eventually reaching 20.58 as the high of the day. After reaching this point, AMC began retracing, with shorters implementing short ladder attacks that were very obvious. AMC found support at 19.40, bouncing back up above the VWAP again. Shorters came out in droves, bringing the price down to a closing at 19.67, below the VWAP. As for tomorrow, AMC will find support at 19.36, 18.80, and 18.60. Resistance will be met at 20, 20.50 and 21. AMC managed to consolidate above 19, which was really bullish, but it seems poised to test it tomorrow as support. I hope it goes back up and begins testing resistance at 20. Today's performance was very solid all around, and even with that fall after the morning run, AMC did really well. GameStop traded bullishly, gaining over 1% for the day. It opened to a bullish run that took it from 124 to 132.85. After this high, GameStop had a small dip, from which it bounced and seemed to be ready to break out again when shorters began attacking the stock, bringing it back down to 125.38. After falling down to that level, GME bounced up, closing at 128.33, below the VWAP. As for tomorrow, support will be met at 125, 124 and 122. Resistance will be met at 129, 132 and 134. GameStop had really good performance today, consolidating above 125 for the most part today. I want to see it retest 129 tomorrow. If we begin testing support at 124, Chances are that shorted will attempt to have it close below 125 by Friday. For now, I am bullish. And that is all I have for you guys today. Let me know your thoughts down in the comments below, and don't forget to watch my morning video. Remember to come join my Discord, I have tons of cool things going on there. If you want to support this channel, I have a Patreon link in the description, as well as some one-time donation links for Cash App and PayPal. Thank you again for being a part of this channel. I will continue striving for better content. Enjoy the rest of your day, keep on buying the dip and to the moon.